Hello, chart watchers, and welcome to this Friday, May 11th, Market Watchers Live Show with your hosts, Tom Bowley and Aaron Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, market's had a great week so far. It is stalling a bit today, though. We got the Dow Jones Industrial Average still up 58 points today. S&P 500 up about 3 2/3. NASDAQ is flat, and the Russell 2000 up 3 points, challenging its all-time high, which is at 1611, all-time closing high, I should say. So we still got about another 5 points there on the Russell 2000 to go. 10-year Treasury yield pulling back just slightly, down about half of a basis point at 2.97%. Volatility continues to meander lower as the move to the upside this week really squeezing the volatility out of the market. Healthcare, one of the better areas of the market today, rising. Energy also rising as well. Medical supplies, the big key to the healthcare group, rising strongly for a second straight day. Did want to point out Align Technology, ALGN, one of the leaders in the medical supply area, has been for quite some time. Been consolidating for the last few months, but is showing a breakout today. We'll talk about that a bit more in just a few minutes. Regeneron Pharmaceuticals, a biotech stock, been under pressure, selling pressure for a long time. This is the best performer in the S&P 500, but it is coming up to test a key overhead resistance level in the 20-day moving average. The worst performer, Symantec, down $10, more than 30% today. I believe that was on earnings, and clearly not a good day for Symantec shareholders. And with that, let me bring in my co-host, Aaron. Aaron, happy Friday.
Yes, TGIF for sure. I'm excited about my weekend. I don't know what you have planned, but being Mother's Day, and I am actually, yes, a mother, and my girls are going to be taking me out to, I think, the beach. It's a surprise. They're going to come pick me up, and I don't know where we're going. So that should be a lot of fun.
Yeah, happy Mom's Day, and of course, happy Mom's Day to all the moms in the audience. It's a big weekend for that. I don't really have any huge plans. I'm going to go out this evening probably and watch a little live music, which I'm excited about.
Excellent.
Probably throw around to golf in there sometime.
I was going to say there has to be golf involved this weekend somewhere.
Yeah, you'd be proud of our weather. I think we're supposed to get up like 93 degrees or something tomorrow. So it's going to be a warm weekend for this time of year, no doubt.
Excellent. Yeah. Well, I think I'll go over our weekly schedule because we've got lots to cover, as always.
Well, we do have a special guest, though. First, I want to just bring in real quickly, Bill Shelby's with us today, going over everything stock charts. How are you doing this morning, Bill?
Good. You?
I can't complain. It's spring, although it's starting to feel like summer already. I was really worried about that here on the East Coast. We had such a late spring. It's like we just kind of went from, I was calling it sprinter because
right.
Spring, but it was really still winter conditions. But I think we're going straight from sprinter to summer. I don't know what you all got out there in the upper Northwest, but hopefully it's, maybe more moderating temps than what we have.
It's trying to get better. We're slowly moving towards summer.
Slow.
You want to give us any kind of heads up as to what you're going to talk about today? Or you want to leave it as a surprise for everybody? About 10 or 15?
Yeah, I thought today we'd go over the candle glance. And everybody's probably seen it and used it, but I thought I would go over some use cases for it and some little maybe tips and tricks that people might not know.
Okay, well, hang in there because we're going to get back to you in about 10 minutes. I'm sure there's a lot of folks out there that'd like to learn more about the candle glance. Now I'll turn it back to Aaron, go through the schedule and agenda. We'll get this thing going.
There we go. Sorry, Bill, I didn't mean to ignore you like that. All right, so we'll have a guest host on Monday because Tom will be gone. So Bruce Frazier is going to join me on Monday. Tuesday, I have my workshop, and I think I'm going to be doing it on trading plans, but we'll see. I'm still trying to formulate it exactly. Dan Russo from Chaikin Analytics will be our guest on Wednesday. We'll get to have him for more than one segment like we did yesterday. He's going to be a great guest. And of course, Julius DeKempener is going to join us on Thursday of next week to talk more RRG. So that should be a great day as well. Today's agenda, though, of course, we just said Bill Shelby's here for everything stock charts, followed by momentum sleepers. We're going to look at some stocks that maybe you aren't aware of that look like they're changing momentum. And then we have the 10 and 10 to 1. Our first stock is going to be Blue Apron Holdings, APRN, if you want to go take a look at that. And finally, we'll close out with my sentiment update and let you know what's going on sentiment-wise. Very interesting today.
Awesome. Well, let me jump into the technical news and try to get Bill in here quickly. The 10-year Treasury yield today, you can see, mentioned at the top of the show, just down slightly, still continuing to consolidate, but in an uptrend, which I think is very important because that shows money continues to come out of the bond market. And that, of course, is available to move into the stock market. We've been seeing plenty of that of late. There was one economic news or economic report out today that was May consumer sentiment, came out at 10 a.m. Eastern. It was just a little bit below expectations, 98.8 versus 99 expected. Doesn't seem to have really much of an impact in the trading today. As I said, the 10-year Treasury yield continues really in this uptrend. Off of this big move that we saw in April, I think it's a little bit of a flag formation. Ultimately, a break above that April high would also be breaking a major resistance level from a few years back at about 3.04, 3.05. So it's going to be a big level because with a double bottom in play from a longer term perspective, and for those of you who haven't seen it, let me just pull this up. The problem is that once you break above a resistance area like this with a double bottom in play, that to me changes the direction of the trend. And that long-term trend, I mean, we're talking about going back since the early 1980s, about 3.5 decades. It seems like this uptrend now is starting something new. And I don't think that that's a horrible thing for now. I think it's something to keep in mind. It could create some problems down the road. But I do agree with Dan Russo, who was on yesterday. He said he expects that this move to the upside is going to be a fairly slow one with the Treasury yield. I agree. I don't think we're just going to go shooting up to 5 or 6% anytime soon. But I wouldn't be surprised to see 3.5% maybe later this year. And that might surprise some folks, may create some volatility at some point, maybe even over the summer. But I think ultimately the stock market is going to be okay with it and move higher. A couple of charts I wanted to take a look at. First, the S&P 600 small cap index made a big breakout. I think we talked about this earlier in the week, but had overhead resistance about 980, maybe just above 980. And you can see the last couple of days we have easily cleared that. If we look back a little bit longer at this chart, it's going to show us a really nice, I'm going to pull up a 2-year chart, but it's going to show a really nice uptrend followed by an ascending triangle, equal highs, rising lows. This breakout above 980 would measure probably about another 100 and, well, let's call it 100 points, 105 maybe. But I'm going to be looking maybe up closer to 1100, maybe 1090 on this breakout would be the measurement on the SML. So I think that's fairly important. Another thing I think is fairly important is the dollar. And we've talked a lot about the dollar. Actually, I'm going to go ahead and pull up the dollar index, which is the USD. And I'm going to go back several years. Let's go back. I think I'm going to do a daily chart for the last 5 years. That'll show us a lot of the support that we had back in 2015, 2016 in this 92, 94 area before we finally broke down. We're back up into that zone now. So it wouldn't be surprising to me to see a little bit of back and forth, although I think the dollar is going to make a run for 95. And I think off of this downtrend, I see an inverse, well, a reverse head and shoulder bottom. I don't know where we pull back to, but maybe that rising 20-day moving average. But eventually, I look for a bigger move. I think the dollar is going to make another push back toward that 2016 high, just based on, you know, unless things start to change in terms of the U.S. rates versus foreign rates, I think the dollar is in the midst of playing catch up and in a hurry. So a little bit of short-term pause, but I do expect eventually the dollar's going higher. So what would that mean if we paused for a little bit? Well, I think the big thing is that the S&P 500 may get a little bit more love than it's had recently. We've seen the S&P 500 being outperformed quite dramatically by the Russell 2000. And so if we pull up the Russell 2000 versus that S&P 500, and let's go back a ways here. Let's go back 3 years. And of course, I don't like to use the candlesticks when we have these relative charts. So let me pull up a line chart. But one of the things that I look at you know, these relative charts can get overbought and oversold, just like individual stocks or ETFs and so forth. During the uptrend that we saw here, the Russell 2000 was outperforming the S&P 500 for a good 6-7 months. During this period, you can see that the RSI got up to about 70. We pulled back each time we got to that RSI 70. Now, we have had a couple of instances where we've certainly gone through 70, but I think if you look back over this chart, 70 has been an area where we tend to see a little bit of struggle. And if you look at the last couple of tops here, we did have RSI right about 70 again. So I think maybe if the dollar pauses for a bit, we could see the S&P 500 play a little catch up, maybe even a little bit deeper decline here on the Russell 2000 versus the S&P. But I would not lose sight of the bigger picture, which to me is showing a higher dollar and therefore continuing move to the upside on the Russell 2000 relative to the S&P 500. I think they both go higher. I just think the Russell 2000 will perform better. I mentioned the medical supplies at the top of the show. Let me pull up a chart here. For the second straight day, this has been one of the better industry groups. It's been the best industry group within healthcare, but it is making a move back up, trying to get through about an 897 resistance level. And you look at the chart, and you're probably not overly impressed. But if we stretch it out and take a look at a weekly chart, what we have is a chart where we saw a lot of strength, pulled back for a period of time, I think hit major support. Some might look at this and say we've got a head and shoulders in place, and we certainly do. There is a formation, left shoulder, neckline, head, neckline, right shoulder. But that is a topping signal, and if I was thinking more bearishly about the market, I would be exiting medical supplies if we were starting to see breakdowns. But in my opinion, we're starting to see breakouts. I'm going to stick with my bullish forecast, which means I think we're going to see medical supplies make another run for the recent high. One stock that was in this group that I mentioned also earlier, Align Technology, ALGN. This is a pretty big breakout. Now, if it leaves a tail above 285 and closes below, maybe we're going to consolidate short term, possibly even a trip down to the 20-day moving average. So I do think today's action is very important for ALGN. Can we get that breakout? If we do, you can see the PPO is just starting to move to the upside. So the close today, I think, is going to be important here on this stock. A couple of other areas. I wanted to bring up the XLY versus the S&P 500. This is consumer discretionary relative to the S&P. Let's get rid of those candlesticks, move to a line chart, and let's go back. Let's go back 5 years, because I want you to see the consolidation that took place in the XLY versus S&P for about 2 years before we got a breakout. I think this is the start of a significant area of outperformance in the market going, for the next year, maybe couple of years with consumer discretionary. And within consumer discretionary, there are some areas of the market or areas of consumer discretionary that have been slowing a bit. So I wanted to, and I'm going to talk about this more when we get to momentum sleepers. I'll look at some individual stocks. But I thought first I would pull up the clothing and accessories index versus the XLY. Pull this up on the daily chart. We started to finally see movement to the upside. We pulled back recently, but you can see that we've broken out to about a 15, 16-month high on the clothing and accessories after a long downtrend, starting to show some strength. Now, if we lose this relative bottom down here, I'd be concerned. But I actually think the group's going to start to pick back up again, something to keep in mind. Then we pull up the specialty retailers versus the XLY. You'll see a little different picture here. This is a group that has been on fire over the past 8-9 months relative to the rest of the consumer discretionary space. I see equal highs here. I see rising lows. I'm looking for another breakout in this group. And then finally, the apparel retailers, the DJUSRA relative to consumer discretionary. This is another group like clothing and accessories that have been moving lower. It's been holding on to this support level of relative support. It has been putting in these higher lows. I want to see this continue to hold, but I'm looking for a move up in the retail space. And again, I'll take a look at a few stocks a little bit later in the show that I think we need to pay attention to. With that, I'm going to bring in Bill Shelby for Everything Stock Charts. Going to take a look at some candle glance charts for us. What do you got, Bill?
All right, thanks, guys. I'll get set up here. get my screen on. All right. All right, we got my screen going there.
Yep, we got you.
Okay. So a lot of people have seen Candle Glance, and of course, you open every show looking at your tech overviews in Candle Glance. But there's some tips and tricks we can do with Candle Glance, and we're going to go through some of those. So we're going to go first to see if we can show you where to find all of these on the various locations on the site. We're going to go through some of the settings and some of the usages and why we would want to use some in one ways and some in other ways. And then we can show how to create a custom style. So we're going to get going and jump over here. We'll start off like we almost always do at our member dashboard. And the first place we can go is to the free tools. This is something that everybody has access to, of course. And we've got our Candle Glance groups here. And initially, we can put in 12 of our own symbols separated by commas, or we can select from a predefined list. And there's probably 15 or 20 groups there. And then, of course, major industry groups around there. So there's a hefty number of predefines there. We'll just go ahead and grab some of our major U.S. indexes. And this is the view that is very similar to where Tom starts out with. The nice thing is about the Candle Glance is you get this sort of 30,000 foot view. You can very quickly look at a lot of stocks or indexes, whatever. We have down here our legend. We have the blue line on all of these is a 20-period moving average, simple moving average, and the red is 50. So those are on all of our charts. So we can very kind of quickly see who's above moving averages, where we've got crossovers, whatnot. We can change our duration of our time. We can go anywhere between 2 days, which is essentially maybe a equivalent of a 10-minute bar, all the way out to a year. So we have different time frames that are available to us. We also have PNF charts for point and figure charts. These can take up a little bit more space depending upon the price action over time, as you can see. So this isn't quite as neat and ordered as the price views. We've got percent versions of the PNF as well. I'll go back and look at 2 months as our default. So we usually start there. We can also add an indicator if we want to see a little bit more than just these basic moving averages. We've got probably 15 or 20 indicators here. We can select one. We have the ability to change the parameters. Hit our go button here. We add the MACD in this case. We can also, as you can see here, sort. So we can change this to a descending order if we want to sort in a particular order. It ends up being, to a certain extent, a small version of the scan engine, or a sort of a screener. Allows us to sort in particular orders. We've got, like say, we've got PMO here for Aaron. There we go.
Yay,
so that's,
PMO.
Yay, PMO. And we'll go back to our members dashboard, and I'll show you the other use that's probably more popular with the members, is that any of our chart lists can be viewed as a Candle Glance. So we can take the results of a scan or whatever and look at those. Let's see, I had another list here that was very similar to Tom's essential major indexes. What we can do, like here, we can start to see where areas in this particular use case of the indexes of which areas of the market may be doing well versus others that aren't. Last time I was on, we were talking about how to use something like the Dow Jones Industries. There are about 160 or so of those that we had, I believe, in our scan. And for me, the Candle Glance is very useful if we're only looking at maybe about 20 or 30. We fit about 30 on a page. When you start to get multiple pages, for me personally, it's just a little bit too much. So it's nice to have a smaller subset so we can look at basically everything in one shot here. So we can start to get an idea of, like Tom was talking about, the small caps doing relatively well recently. We can see the transports breaking out. Utilities aren't so hot. And we can.
I would also add too, Bill, I think, when you run a scan and you come back with a lot of results, say 100, normally what I'll do is I'll refine my scan, try to cut down on the number. But the other thing is, if you use the Candle Glance, it's much easier to go through those 100 stocks, looking at them 30 at a time with these little, mini charts, than it is to pull up one at a time. If you know
exactly.
So it can be used to go through a number of stocks rather quickly. Yes,
and that's I'll get to some more of that in a minute, but it's exactly true. we were talking about the ability to sort these and rank them. One thing I will sort of warn people against is a lot of these items are, well, let's see if we can find one who has a good version of this that will show us exactly what we're talking about. PPO is one where we've got the same scale. Sometimes we'll notice what you sort of want to look out for is to have this tendency of saying, well, this chart has something, the price has been going up and it's up in the top right corner, which is where we kind of like to see things. But this one's not so much. Maybe one of our other ones, oh, this one's not near the top. So you would have this tendency, we would say, to say, well, clearly the one that's in the top right is performing better. And you kind of have to keep that in check a little bit, because you'll notice that on the right side here, our legend, the scaling is different. So a big move on a chart that has a very small scale may not be the same percentage move as a chart that has a larger scale, larger numbers. Similarly, if you've got an indicator that's based on price, that price may have a different value as well. So you don't necessarily want to rate these based on the numbers in the scale unless you're sure that you're looking at the same your apples to apples, because there can be a tendency to kind of just look at the raw numbers or the raw visual patterns and assume that since they're similar, we're looking at them and seeing similar items, that we can make comparisons, and not always the case. So just have to kind of be aware of that. So as Tom mentioned, another way we can look at this is I'll go back to my test list here. And this is a list I created out of some scan at some point in time. We go back to our default. We have no indicators here. We can simply go through, as Tom mentioned, say, well, we've got our little, when we hover over it, we've got our little trash can. And as much as we'd like our scans to return things that are perfect and we can act on immediately, just sadly doesn't work that way. So we will get a little bit of noise in here. So we want to just kind of go through and clean this up. So we can go over to each of these candle glances. So we can hover over and we get the little trash can there. You can see it turns red, and we can just delete it. And when this is designed to be a very quick sort of, as Tom mentioned, very quickly go through, delete things, and just get rid of them. You'll notice there, I didn't get a prompt to say, are you really sure? So you want to use this feature on chart lists that are sort of temporary, because they will just, the symbol will just go away. We're not going to ask you. So if you've got your favorite list, be careful. You just really probably want to do this on lists that are temporary. And like we say, well, Gilead's not doing that great. Scripts maybe over the long term. We can very quickly go through and weed out some of the duds here and come up with a section that's giving us much more of what we want to see. When we do have similar items, one of the indicators we can use, for example, is the scooter line. And the scooter line does compare like items. It will fall into the respective, what we call universes, small, large, mid, ETFs. So we're closer at being able to compare apples to apples here. If we had a chart list that was all large caps and we did the scooters and we ranked them, then we could see a ranking of that we could trust. Here we have rankings of a number of different scooter types, no doubt, but we can rank them from the best to the worst. We've now gone below one screen, so we got all of them on one page now. If we had multiple pages, of course, we'd be able to go through and sort them and scroll through the different pages. So this is something we can very quickly say, okay, TripAdvisor obviously had a huge breakout and continuing to follow on to that. So it's got a fantastic scooter, huge jump in the scooter there. So we can very quickly use something like the scooter line as a scan result after we've run our scans to sort of additionally weed out certain areas. As well, Erin maybe, once she's got some scans, maybe looking to see who's got a PMO crossover recently. So maybe that's not quite so good on the PMO there. So you can use, if you've got your favorite indicators after you've run an initial scan, maybe you've got sort of a secondary set of criteria. And if those criteria are on this list here, you can then add those to this list and then quickly go through your scan results, whittling down the results to something that are a little bit more useful. And then you can move that little batch onto whatever your next process is. So we can click on the link there and get a full image. And what we can do is, if you're consistently using the candle glance as, say, a scan result filter, and you want to have something constant, you can create a custom style. And what we'll do here is I'm going to kind of create a sample style here that I'm going to try and please all of our commentators with the same set of information. So I know that Tom uses the MACD, earns a PPO, PMO, and let's see, we're going to get one in here for Martin Pring. And I know that Arthur, he likes the stochastics, so we'll go with that. We can update this. We've got all of our some of our commentators' favorite indicators there. Well, let's do a little change of the color to now that's nice and colorful. So we'll do that, and we'll save this. We'll add a new style. And if we call it Candle Glance, like it's spelled here, and we add that style, if we go back to our members dashboard, we go and look at our scan results. Now it'll use our style. So if we're consistently using Candle Glance as a way to, say, filter scan results, and we have a very particular favorite indicator that we want, we can save a Candle Glance style and it will be applied when we come in here. We'll check when we first bring up the Candle Glance page to see if you do have a style. If you do, we will automatically, as you can see here on the left, we will automatically jump to the custom style as by default. If you want to go back to the regular view, you can do that. You can go back here, look at a regular view and add other indicators, or you can go back to your style. When you are looking at your custom style, you'll notice that the indicator and the sorting is turned off. We will only use the indicators that you've added. We won't allow you to add more. So if you want to go add a different one, you can either go back to a different time frame and add it, or you can go update your style if you find you're consistently looking at a particular indicator. Another use for the PNF I find in the scan results is to look for stocks that have overhead resistance. So we may have something that's maybe had a little bit of a recent breakout, but may have a lot of uphill battle here, because as we start to move up through these prices here, we're going to have people who have bought at these higher prices. So Amgen, people who have bought up in the upper 190s, 180s. As we start to move through those prices, we can expect some selling action. So maybe I'm not really looking for something that's an uphill battle, whereas ADP, look, we've got like a triple, quadruple top breakout there, and it's making new highs. So that's something I'm interested in keeping. So that's another personal use that I have for the using the PNF charts inside the Candle Glance. And that's sort of an overview, a little bit deeper overview of the Candle Glance.
Very cool.
Yep, I use it all the time.
Yeah,
I truly do.
Yeah, I was just going to say, I know Aaron uses it a lot. I use it, of course, with the update at the beginning of the show. And I will occasionally, when I run a scan, if I get a lot of scan results, like I said, if I get 100 or 140, and I really want to look at them all, but I don't want to have to go back and cut them down because I'm afraid I might, exclude something that I really like. I'll bring them up in Candle Glance because it is a real quick way to take a look at 30 at a time and just say, no, no, not looking for that. No. And quickly be able to zero in on the ones that, I want to look at in more detail.
And additionally, if anybody's interested, I'll make a note to put it in today's recap. But I did write an article a long time ago, I admit, but it was all about using the PMO with Candle Glance and how to set it up and what the value is and how you can use it. So I'll put that in there, but it was called PMO plus, the plus sign, Candle Glance equals smart money.
Awesome, Bill. Thank you again for coming by and sharing another concept with us here at Stock Charts.
You bet. Thanks for having me.
Always a pleasure. And there he goes.
Yes.
So I'd like to have like a quarter of his knowledge.
Yes.
Might be dangerous if I had a quarter of his knowledge.
I certainly would be more dangerous on the website, that's for sure.
All right. Well, we do have a segment that we are going to get into, which is Momentum Sleepers. This is a segment where we essentially try to find some sleeping giants from a technical perspective. It could be stocks or industry groups that are consolidating, market moving higher, but maybe these haven't, done what you've expected them to do. But they haven't broken down, that sort of thing. At least that's kind of how I view momentum sleepers. You may have a little different definition for it, Aaron, but we're going to try to uncover some groups and some stocks and so forth that maybe, maybe before a big move occurs. And so that's the whole idea. I don't know if you've got some. You ready to go?
I certainly do. If you want me to start, I shall.
Go right ahead.
Okay, so I'm going to come into here. So I started, of course, it's the member dashboard. Today I started with a predefined scan. One I don't use that often, but thought it looked interesting, was stocks in a new uptrend using the ADX indicator. So I went in there and picked out a group. I think I did the NASDAQ. I can't remember. No, probably the NYSE. But I picked out that group and put them in a chart list. And I will go to that chart list for you so that we could look at them. I already went through the candle glance. So I already looked at, it was a group of about 32, 33. And I picked out the 5 that I liked the best. And so, I'll show you those. Clearly, there are some that are a little bit, for example, we'll start with CTIC. This one, of course, is going to be very volatile with the lower price, not as liquid as some of your other stocks. But this one came up, and not all of them had PMO crossovers or something good going on. But what I liked here is that we have this cup right here, this rounded bottom. We're starting to come back down on what could be a little bit of a handle there, back to test that 20-day EMA. And I think at that point, given the fact we have this PMO buy signal in play right now, before we've even had a serious uptrend, right now we're consolidating and, like I said, maybe pulling back. So I thought this one looked very interesting. But again, this is, in the less than $5 range. So you're going to get you could get some big swings. So that was one that I liked. AAP, Advanced Auto Parts. And as you can see, not all of these have had actual breakouts, but that's kind of what I was looking for. I wanted stuff where the momentum had shifted and we were getting either chart patterns or, get this set up, or breakouts or, that sort of thing. So with Advanced Auto Parts, I liked that we were getting this, well, we are getting an intraday breakout anyway above these previous tops from back in March. Now, of course, we have a little bit more overhead resistance right here. But I think that getting that breakout, nice V bottom, got the PMO buy signal. We now see the PMO in positive territory. And now we have a little bit of a breakout. So I think this one could be under the radar or a momentum sleeper. Yeah, I'll save those changes. Why not? All right, Brookfield Property Partners. This one was one I saw, the PMO is getting ready to be in positive territory. And let me get my annotation tool going here. And what I was noting was this chart pattern. You've got that rising bottoms trend line. Don't need an arrowhead on that. And then we previously had, it was very much like an ascending triangle. In fact, let me pull that little guy back just a bit. There we go. So we had an ascending triangle here, and we got that breakout. And now we're sitting right on top of it with that consolidation. So I think this one has some opportunity to move higher. And again, I like the fact that we got that buy signal and we're getting ready to get into that positive territory. And positive territory we have not seen for quite some time on Brookfield Property Partners. So I thought that was an interesting one as well. Let's see. We looked at that one. Let's look at Inphase Energy. This one, okay, it looks like a double bottom, but if you're going to go by the rules of chart patterns, if you recall, double bottoms and double tops are reversal patterns. So when you're looking at a double bottom, you're looking for that breakout right above the neckline or the confirmation line. but it's coming off of an uptrend. So it's not actually, you know, textbook style double bottom. I suppose you could look at it, you know, if you want to look at it that way, at least for breakouts, which is what we're getting ready to do here. You can follow that, but I wouldn't look at this as the actual chart pattern, meaning that you could add the height of the pattern to the current price at the breakout point, and that would give you a target. However, I'm not confident in this pattern just because it's coming off of an uptrend. But notice we're just now getting a PMO buy signal. We're in the process of breaking out above the April top right back here and the March top over here. So I think that this one was very interesting as well, because we could be seeing a breakout. But again, so in this case, we do have a $5 stock, but at least we're having decent volume behind on this one. So I'd feel a little bit better about that. Enphase Energy. So that was one I thought was interesting. And then a big giant, Intel Corp. And, you know, it's been rather flat. You can see the PMO flatten out. There's been, you know, not that much excitement going on here. But now we're seeing a breakout. And I'm going to draw this in here. And another similar, this is an ascending triangle, a bullish pattern. We're just now getting a solid breakout above it. We've closed above it. We did not close above it the last time. So I think that is a positive. And again, the PMO buy signal, right now the space is starting to heat up a bit. So I think this one, Intel looks pretty good to me right now. And, you know, again, we've had some problems in that space, but now we're starting to see some awakening. And so that was the other one that I was going to share. And let's see, I'm leaving you plenty of time, Tom. I don't know if you saw any of these you were interested in, or I know you probably have a good list.
Yeah, I got a bunch of them. I like that ENPH that you showed earlier, though, the Enphase, because I thought, number one, it's a small company. It's in a really solid area of the market, and it's up against some resistance, but I do think that it's been consolidating, and probably just a matter of time before we get that next breakout with the volume trends.
Sure. Yeah, the OBV, I didn't even point that out, is breaking out here. It'd be nice to see it get above that previous top, but it's already beat out the top we saw earlier in May.
Yep.
So yes. All right. Excellent. I'll be paying some attention to yours too.
All right. Well, I tell you what, I talked earlier about a couple of the areas within consumer discretionary. So I think that's certainly one thing that I want to focus on here. Let me bring up my first chart. And you can kind of see how some of these are really, they haven't made a breakout, but they look pretty good technically. So I'm going to go ahead and show the first one, which is Best Buy. So you should have the Best Buy up on the screen here. Now I'm going to say this with a little bit of a warning, because we had a nice uptrend. It's been consolidating, a little bit of an ascending triangle kind of a look to it here. But got to be careful when you get these false breakouts. And I just wanted to point out here, the intraday high on Best Buy back in January was 78.09. And notice this high right here, we got up to 78.22 intraday and then reversed and closed down near the low of the day. And you can see 3 days later, we were down about another $3 or so, $2.50, hitting that rising 20-day moving average. So today we got up even higher. We went above the 78.22 area, got up to 78.29. But currently we're back down below 78. Now, so far, I don't think this candle looks too bad. And if we finish strong and get a little bit more volume coming in later, that would be a good thing. But currently, the volume is a little bit weak. So to me, this is a stock that is just consolidating and just waiting for a breakout, especially if I pull up a relative chart. What you're going to see is that this has just been kind of an okay performer within the specialty retail space. Here's the chart of Best Buy. Here's the chart of the specialty retailers. They look somewhat similar. And so then you look at the Best Buy relative, and you see it's just kind of going sideways for a while. It goes through periods where it goes down, then it goes back up. But for the most part, it's just been it kind of going along for the ride, which isn't a bad thing when you've got its peers going up the way that the specialty retailers have been going up. Best Buy also relative to the S&P has been performing really well. And this is how you can find groups that are performing or outperforming the S&P 500. When you bring up the industry group : the $ SPX. That will give you that relative chart. And I think this is really important to try to invest in areas that are continually outperforming the S&P 500. I think that makes it a little easier. Now, Best Buy is consolidating, but it's not the best performer in specialty retail. That would go to, or one probably would go to Netflix. So if I pull up Netflix, of course, Netflix also is consolidating. It reported great earnings, huge gap up, went all the way back down to the 50-day, printed a nice little doji, and it's been working its way back up again, although volume is just kind of meandering. I would expect maybe we're going to see a little bit more consolidation on Netflix, but ultimately I would be looking for another breakout here. Now, if you move down and you see Netflix relative to its peers, this is where you can see the strength, the relative strength of Netflix as opposed to, say, Best Buy. So you're in, both these stocks are in a great space, but one is clearly the leader while the other is just kind of going along for the ride. And again, you look at the bottom and then you see relative strength. Now, you might say, well, how do I find these stocks? And one of the ways, and we talk about scooters a lot, so I just wanted to kind of show you this scooter report. There's the large cap stocks. Now, if I type in specialty retail, it's going to give me in scooter order among the large cap stocks, the best companies. Look, right there is Netflix, second, Best Buy. So even though Best Buy hasn't made a breakout, it's been consolidating for a few months, it still carries one of the best scooter ranks in that space. So to me, this is a sleeper. This is one I want to keep an eye on because it is a top performer. And if we get that breakout, it could go on another run. So I want to keep an eye. Another one I've talked about recently on the show is Ulta. This one, was in that downtrend for a while, made a little push on some heavy volume back in March, pulled back all the way, actually a little bit below gap support, and then has taken off again. I think this is a nice looking chart that has been moving really well. And again, by looking at the scooter, it tells us that. You've got, no, that's the wrong one. Go back here. Here we go. So here you've got Ulta showing as 84 on the scooter. So it's, again, up in that top quartile, which I think is really important. You want to trade mostly, I'm not saying all companies, because a lot of times when these stocks are first starting to make moves, they do tend to have lower scooter ranks. But once they get above that 75 level, a lot of times they'll consolidate and you can find some great trades within there. Now, I've talked a lot about small caps. So if you want to look at specialty retail, but you really want to focus maybe on the smaller companies, just click on the small caps. Now, all of a sudden, you've got the top stocks in the specialty retail area among the small caps. So, for instance, Shutterfly recently came out with great numbers. Huge gap up. Look at the volume, and it's sideways consolidating. May go back down, hit that gap support, top of gap support as it's testing the 20-day. We'll have to watch it. But this is one that's consolidating. And maybe it seems like it's lost a little bit of its momentum since earnings, but I think it's just consolidating before another move to the upside. Now, I want to go through some other retail stocks. I don't want to just get stuck with just the specialty retailers. But let's take a look at Gap. This one has been under pressure for a while, but it's down near major gap support. No pun intended. But here you've got Gap at gap support in this zone. And as it's doing so and putting in this lower low, it actually has a slightly higher PPO. And now it's coming back up, testing the rising 20-day moving average. From a longer-term perspective on Gap, you can see we had some pretty good resistance up here around 28. And we got up to 29. So I'd say 28.29 was major resistance on the stock. We went through it. And now where are we? We're down consolidating in 28.29 area. So again, you've got a stock that maybe is completely out of favor, hasn't been performing well last 3 months, but on a longer term perspective, probably pretty close to trend line support. And we know it's, at a key price support area. So this is a stock that was $35 3 months ago, now back down at 28.29. I think this is another one that could be a little sleeper as it's been consolidating as money rotates into other areas. During the pullback, by the way, if you look at the volume, not really huge volume on this selling. So I do think this one could be setting up. Another one would be Kohl's. Talked about this one. It's been a little disappointing, but it is still holding on to support, which is right at about $58. ANF, this is Abercrombie and Fitch. Another one that broke out above this top area around 24 and a half. Notice we came down just below 25 recently, consolidating. This, again, money has been rotating away from these stocks but I would not be surprised to see another push to the upside. BURL, which is Burlington. Burlington, I think you had pointed out earlier, Aaron, a nice cup. Well, this looks like a pretty nice cup to me. Nice move to the upside. Nice little rounded cup. Sideways consolidation. Looks like a little handle going in. Breakout above 140 on Burlington, I would find to be somewhat bullish. Tiffanys. Tiffanys, and I'm going to let's pull Tiffanys up on a relative chart, just see what we have here. What I'm seeing is a move to the upside, perhaps a left shoulder, neckline, inverse head, right side of the neckline. This could be the shoulder. Look for a breakout here around 104, 105. I think that would be very bullish. Tiffanys has been underperforming, as you can see, for a while. But if we get a technical breakout, we could certainly see that start to change. And it is in a very strong area of the market. And then I've got maybe one or two more. PVH, I'm going to leave this on that relative chart. Let's take a look at PVH. I think PVH is trying to strengthen here. I'd like to see a little bit more of a robust move. You can see that the selling came on some decent volume, and we're not really getting a huge advance. But 150 is great support, and we did recently have a breakout here. And part of what we're seeing with the sell-off is that the overall group, clothing and accessories, is under a lot of pressure. But this is one that's held on to gap support, and I would like to see it maybe make another push to the upside. Recently, PVH broke out relative to its peers, and it did pull back recently, but overall, I'd say this is one of the stronger stocks in the space. It also has been performing well versus the relatively versus the S&P 500, and it is back near a key support area on the relative chart. And then finally, except just recently, this is a group that's been performing pretty well relative to the S&P. So if that starts to resume, you want to keep an eye on PVH. So those are the ones I had that I thought were kind of interesting, that maybe you might look at and think, well, it's not, market's been moving up. These stocks really aren't breaking out. That's a problem. I see it more as an opportunity than a problem. But
absolutely. And, of course, every time you show those relative charts, everybody wants to know how to get them. And if you go to any of the Market Watchers Live blog entries, at the very bottom, I have a link that'll take you to the workbench with all the relative settings. And then at that point, you can save them, and then you'll have it. You can look at anything in those relative charts. So with that, here are the symbols that we covered off, as Greg likes to say. Have you noticed that, Tom? He always says cover off. We're going to cover it off.
I think that's Canadian slang.
I love it. Okay. Anyway, on that aside, but now it's time to move right on into the 10 and 10. And let's see what we have today. I've been keeping up with everybody's requests, and actually it's kind of low today. Usually we get about 35 or 40. This time, I'm not going to be taking any more requests. So what I would suggest you do is in the chat room, go and like the symbol requests that other people have made, and then the top one of those will be the next symbol. And I'll give you a quick RRG, and we'll take it to the daily level.
From talking with Julius and having him on, a lot of times he likes the stocks that have gone out of leading into weakening, but then are starting to turn back up.
Yes.
I was just wondering maybe if we have any of those.
Yeah, let's take a peek. I can see one that's looks like one that it's turning itself back around. IJR, of course, the small cap S&P 600 ETF.
And I think you can, can't you click down below on one of the names to highlight it so it shows up? Yeah, I think you click on that line of IJR.
And there you go. So now you can see it a little bit better.
Yep.
And IJR right here. So I will take a look at some of these, and we will see what will be. But right now, guys, like I said, go ahead and like those symbol requests. And I'm sorry, but I have to cut off the requests at this point. And I guess our first one is Blue Apron, if I recall, Tom. So have at it. Yeah,
it's a much smaller company, but I think it actually could set up for those who are more inclined to trade these small companies. Stock got up to about 290 recently, as you can see, just a couple of days ago, all the way back down to 240, made a huge move up, breaking this downtrend line, and did it on some real heavy volume. I think we're running into maybe just a little bit of overhead resistance near $3 based on the support that was in play prior to the breakdown. So you can kind of see that support right here coming across. Here was the breakdown. Look at the volume picking up during the selling. Volume really lightened, though, as we got toward the bottom. And now as we're starting to turn back up, you can see the volume picking up. Now, I wouldn't, be interested in chasing. I don't like to chase these stocks, but when you get a stock that's over 290 and it pulls back to 240, getting close to not only the rising 20-day, but also an area of the most recent breakout, which appears to me to be around 230. I think this 230, 240 area presents pretty nice reward to risk opportunity in Blue Apron. But again, it's a $2 stock, not for everybody. But overall, I think it looks pretty good here. Do you have another one?
Yes, the most popular request is, drumroll, AMD.
I was looking at AMD earlier. It's really performing much better than it has in quite some time. We did see a little bit of this movement like this back in January, but of course, that's when the market topped. And so money was kind of rotating. It was really difficult for many stocks to make much headway. But now we've got a different market, in my opinion, that we're starting to move up. We've seen breakout on the S&P 600 small cap index. We've seen some recent breakouts, at least above recent highs on the XLK technology ETF, the NASDAQ 100, and so forth. So I think the market is starting to show some much healthier signs of late, but I still would watch a couple key areas on AMD. I think the selling that took place in February, as you can see down here on really heavy volume, when we started our recovery, we could not get back through about the 1275 level. So I think we've got a shot here on AMD getting back up to that level, and then I'll kind of reserve judgment. Let's see what happens when we get there. To the downside, I think we've got the golden cross now with the 20 coming up over that 50-day moving average. You can see that right here. So I think pullbacks should hold that rising 20-day moving average. So right now, AMD is kind of between, right in the middle of a range. I wouldn't be jumping in here if I didn't own it, but if it pulled back, got closer to maybe 11.25, I think that would start to get pretty interesting from a reward to risk perspective.
All right, and let's go ahead and look at PICK, P-I-C-K. It's the Metals and Mining Producers ETF.
All right, yeah, I can see why it's starting to turn back up again. I mean, we had a really nice move back in, for about two or 3 weeks in April, pulled back off of it. Now we're moving back up. I think we got a little bit of overhead resistance we need to deal with here. So in the short term, again, this is one I'd be careful. I don't know that I would be rushing in at this point because we have gone up pretty significantly the last 3 days, and really going back the last 7 or 8 days off of this bottom, we're up about $2.50 on this ETF. So that's a pretty good size move, and we are at some short-term resistance. But I like the PPO. This is one that I would keep on my radar, and I think if we got it back to that rising 20-day moving average, or if we get this confirmed breakout, then I would be much more interested in it. I think it looks good, and I can see why it's starting to look better on the RRG.
All righty. Let's see the next one, and we haven't looked at it for a while, but it's always a popular request, is Snap.
Yeah, Snap replaced their CFO. I think somebody in the executive offices just snapped. I thought this was a big blunder on Snap's part. I think you're much better off, confessing your sins early on and not waiting and just shocking the market with a report that completely catches everyone by surprise. Again, I don't have any knowledge of what happened in their executive team, but I do know right after this report, the CFO was gone. And that's, probably not a coincidence. Anyhow, big breakdown with heavy volume. We've been sideways consolidating, but even off of the huge move, we were at $21 back in early February. Now we're at 11, really struggling to find any buyers here. I mean, I don't see any hollow candles. I haven't seen a hollow candle since back on April 24th. So that's telling me that there's still a lot of distribution going on here. I don't like it. If you can get a close back up, say above 1140, 1150, then things start to maybe get a little bit better technically, but I would avoid it. I'm just not a fan of Snap.
All righty. Let's see. PetMed Express, pets.
All right. I think Pets, I know, had a couple of really nice earnings reports. I don't know if their last one was a good one. No, apparently not. This is one that's somewhat similar to Snap. I think this was an earnings report where they gapped up, looked really strong, and then for 3 months, they just continued to sell off. Kind of unusual. You don't normally see that, a gap up and then just complete failure for the next few months. But Pets certainly has done that. I think that we're beginning to see an improving PPO, but we got to get through that 20-day moving average. So I think at this point, I would avoid it until at least we can get through the 20. I mean, you can see as we go through here, they should be red arrows, but we'll just stick with the green for now. Once we broke below that 20, you can see that the momentum has been to the downside. So I've got to at least get a break back up above the 20 before I'd consider it.
All righty. Interesting pair we have here, and I had to pick one, but we had Home Depot and Lowe's, both of them requested, and I decided, because I like to shop at Home Depot better, that we would pick that.
Yeah, Home Depot's been the better performer, although I think earlier I saw Lowe's outperforming today. But I think that Home Depot's made a big move here. I think this is a very important breakout. We've gotten the golden cross, and this is what I was talking about with the market being in a better position now technically than it was a couple of months ago. You can see that rallies, as we were rallying before, we had a declining 20-day moving average and a death cross. Here, as we're getting these rallies, we're actually seeing the 20-day rising now. So I think we've gone through this consolidation phase, and I think stocks are heading higher. I think a key area of resistance is right here off of this gap. Probably could put a couple of levels in here. I think this whole area of gap resistance could present some short-term difficulties for Home Depot, but I think that's all it's going to be is short-term. I look for, even if we get a pullback, I think the rising 20-day continues to hold, and eventually we're going to get this break through the gap resistance.
Okay. Another pair we had was UPS and FedEx. I thought the RRG looked a little bit better on FedEx, so I'm going to pick FedEx.
Well, you know what? We looked at FedEx, I think, yesterday.
Oh, well, there you go. Did we really?
I think so. It was yesterday, the day before.
Yep, I think you're right. So guess what? We're going to go with UPS.
Yeah, I'm going to go with UPS. And very similar to Home Depot, I just think it's starting to show much better strength. We've got a better setup now, and we've got some overhead resistance to watch. But here is your golden cross. The 20 goes back up above the 50. We're now trending higher. You can see the PPO is clearly above centerline resistance. So that's all good. I just think we're going to have an issue when we get up to about 118.5 on UPS. That's where a lot of sellers came in on this gap down. And so I think when we first get up there, we're going to at least struggle for a period of time. So watch the rising 20-day to the downside and about 118.5 as gap resistance to the upside.
Okay. The other one, also a very popular pick, was the semiconductor ETF, SMH.
Yeah, semiconductors have definitely strengthened. We got to get through this 106 level on the SMH, but clearly we got this move up. Still got the 20 below the 50, but it's turning in the right direction. PPO trying to move back into positive territory. You know, you look back over the last several months, this is definitely a group that has been struggling. Heavy volume to the downside, but we have come all the way back up, at least cleared the bottom of that gap resistance. So that's one area I think that's pretty critical that we've gotten through. And as you see this 20-day moving average rising, that's going to quickly come up to about that 102.5 level as well. I think as long as this area holds to the downside, I'm okay with the SMH. But I do want to see a breakout. I want to see it get through the 106. So I'm going to say maybe 101.5 to 106 is a fairly narrow trading range to watch on SMH in the near term.
All righty. This one has an awesome RRG. And I think the chart's really interesting because I'm seeing what could be a flag and test of support for GoPro, G-Pro.
Wow, this thing has been under so much pressure. I don't like these tails where, you know, it looks like maybe there's some distribution going on. Clearly, it needs to get a breakout. It needs, you know, it's improved, no doubt. The PPO is broken out above center line resistance. You got this golden cross, which is awesome. Short term, though, we are getting failures at what I think is a fairly key area of resistance. So here you can see the reaction high right here at about 580, and the prior low which was right in here before the breakdown, came in at about $6. You can see these three tails coming up into this zone and then pulling back. So another one that I think is definitely improving, but let's look at the rising 20-day for support, and let's see if we can get through 6. I think a breakout above 6 with increasing volume like we saw about a week ago, that would be bullish.
All righty, let's see. Got only one more. Let's see. Let's do a gambling industry, IGT, International Game Tech.
All right. Been going sideways for a while. I didn't do any on the relative charts. Let me pull this one up on a relative chart to see if that's telling us anything. Definitely in a gap support and price support zone on these recent lows. That's the first thing that sticks out at me. So let me annotate, just show you that. So there is your gap up from earnings, and then that is your prior high. So as we've come back down, we've been holding in this zone, turning back. I think we're consolidating in this stock just as we are in the gambling stocks as a whole. So there's your DJUSCA, which is the gambling index. So IGT just kind of going along for the ride. It's not the best stock in the group, but it's certainly not the worst. And it's doing okay relative to the S&P 500. Gambling overall is showing a little bit of outperformance relative to the S&P. So I'm okay. I think IGT is a good performer. We could probably do some research and find some that are acting a little bit better. But IGT is okay, I think, for a hold.
All right. And I believe that is 10.
All right. Cool.
Good job. We really are on. We're just on it today. Our timing is really, really great. So
I don't know if our suggestions are any good, but the timing is perfect.
yes, absolutely. All right. So you should be seeing here right now are the symbols that we just went over. You will find all of these with the annotations in the Market Watchers Live chart list. Very easy to get to. Just go to the Market Watchers Live blog page, and the link is right there at the top of the blog page, but they're also within the blog articles themselves. So you want to take a peek at that. And with that, I think I'm going to move on to stockcharts.com/ChartCon. All righty.
Under 3 months to go.
I know. I was just telling my husband that. We're very excited to make that trip up to Seattle. And honestly, part of the thing that I'm really, really looking forward to is getting together with all of the speakers. Just such excellent speakers. Of course, there's those of us who are pretty close there at StockCharts, but we also have some excellent additions like Dr. Elder, who you know that I always, and in fact, on Tuesday when I do my workshop, I am probably going to use a lot of material from Dr. Elder again. So I highly recommend any of his books, but he is going to be there to speak to us as well as one of the big names, as you might say. So he's going to tell you about placing stops and how to reduce risk. So, you know, honestly, just a few of these presentations would be worth the amount that you would pay to register. It is online, it's streaming, so you don't have to fly up to Seattle like we do. So you can view it in the comfort of whatever chair or room or place you would like to. And then you also will have that information for you to go back to historic. You can go see in those live streams, and it'll all be saved. So you don't have to take furious notes while you're watching it live because you'll have it to go back to.
Yeah,
so
it is pretty cool too that you could literally be out on a boat in the Pacific.
And you know, do you remember we had a social app, and I can't remember the name of it, but it was basically an app that was only social media for our conference. So it was sort of like Facebook. You could upload pictures, and you could you know, have statuses. And I just remember, and I'm sure you do too, is people with their pictures that they would post. Like one was this beautiful place on you know, you could see the lake out there. I think there were some people like up in cabins or on a boat watching.
Yep. It's pretty fascinating when you think about it. I mean, you know, think back 10, 20, 30 years and where we were and where we are now with technology. It's pretty amazing.
Absolutely. And yeah, it's just a great time. And like I said, even though you're not going up there live, in person, with the app we use, you still can interact with the speakers. Tom and I are on there, and Greg, the three of us were really active, answering questions and posting stuff so you could see what was happening behind the scenes. So you'll really be a part of this conference if you go. It's not really just I mean, of course, it can be a passive thing, but if you want to get active within that conference, even though you're watching from home, you can do that. And for the price, I don't know about you, but I know just in one trade, I could save or make the $250 that it's going to cost to go. So I think right there, I mean, come on, $250, and you'll probably do very well after listening to some of these speakers and using some of their techniques.
Yep. I know we got with I was just looking at the market here. I'm sorry, but I was just looking at the market that the NASDAQ and the NDX both have taken a turn for the worse into the negative territory. The Russell 2000 has as well. So I thought maybe
let's look at it.
Market update.
Absolutely. Market update. Here we come. Let me get to our members dashboard, and I'm going to go through the candle glance. These are a 2-day candle glance, as you can see. So we're only getting mostly what's happening right now. I'm going to add the TSX in here so that we can see what's going on with that as well. Yeah, look at that big time pullback. I'd been talking about those climactic indicators of mine, the VIX, puncturing that upper Bollinger Band for me on my inverted scale for the VIX. And that typically means when it's accompanied by breadth readings that are climactic, I look for a pullback or a decline. And as I told people, it doesn't need to be 2 days worth of decline. It could be a decline right on in the day, and then you could end up with a recovery. And it looks like, with the Dow, we came down to yesterday's close, and we're now popping back up. S&P went negative, but we're now popping back up, head above the water. NASDAQ, not so much. And, it's been showing a lot of strength lately. And so I'm not really thrilled with that drop, but we are trying to make up some of the losses that just hit us over the lunch hour. Russell 2000, big rounded top here, sitting mostly unchanged. We can see that Canadian markets very similarly went up right on into lunch, and then lunchtime, I don't know, was everybody hungry? They just left the markets, I don't know, during lunch. Decided to sell everything on Friday. But we are starting to get back up there. Treasury yields are mostly unchanged right now, reading at 2.97. You can see that UUP is down on the day, had a big gap down, made a bit of a recovery, but we're moving back down toward those intraday lows again for the dollar. You can see commodities are lower. USO, we're seeing that oil prices starting to fall back a little, pull back. I would expect to see some consolidation right now. And USO reading at 1435. Gold, GLD, is sitting mostly unchanged. Had a really nice morning with a gap up for GLD. Came all the way back down to yesterday's close, and it hasn't really done much since then. But we are staying head above water for gold, bouncing now off of yesterday's close. See, the VIX is pulling back down here. So we had a little bit of a spike here during lunch, not surprising when everybody saw the market starting to move lower. But now we're seeing it come back down and actually reading a bit lower than it was yesterday at 13.21. So we're still looking at pretty complacent numbers there. And let's move on quickly to our industries on the market summary and the sectors to see what's going on intraday. Who are the big winners? Who are the big losers? Right now, healthcare and energy are leading, both up over 0.5%. Consumer staples and the technology ETF, both of those are the only two in the negative. Technology moving back down into the negative when we were seeing it positive earlier today. Industry groups, transports, and retailers are in the lead. And we can see as far as the laggards, semis, and disk drives. So, with that NASDAQ falling, not a surprise to see some of these technology industry groups struggling a bit right now. International ETFs, Hong Kong, Japan are leading. And we can see that Brazil and Mexico, certainly the biggest losers, both of those down over 1%, with Brazil's ETF down almost 2%. I'm going to take a quick look at the Russia ETF. It was requested on the 10 and 10, so I thought I would give it a quick peek as we finish up the market update. We've got the big gap down, starting to make a recovery, and notice we gapped up on this particular recovery. We're back above the 200-day EMA. 5s crossed 20, broke out above this April top. So I think that looks pretty good, but we have a very large gap resistance here to deal with. And so I think that upside potential might be a little bit limited right now, given the gap and the low back here in March, posing pretty serious resistance. Do like the PMO buy signal, though, rising on this particular move. You can see that these bottoms on the PMO are matching up with the bottoms on price. So that's a nice bullish confirmation. So I think it looks pretty good. I'd just be a bit concerned about this gap resistance. And with that, I'm going to conclude our final market update. Was there anything that you wanted to add, Tom, before I go into my sentiment?
No, I think, again, dollar, I think pulling back is kind of a little bit interesting last few days. But, you mentioned once before that I think that 24.5 level has been a little bit of an issue of late, going back there in late 2017. So I think the pullback there is kind of interesting because it could slow some of the relative strength that we've seen in the small caps recently. Maybe see a little bit more rotation back to the Dow Jones, the S&P 500 in the near term. But I do think that dollar goes higher.
Yeah, absolutely. I wrote about it on Wednesday. PMO is starting to go overbought. We were hitting that level of overhead resistance, so kind of expected some consolidation or a bit of a pullback, maybe down to that 200-day EMA. That'll get that PMO out of overbought territory, bring it down closer to the zero line, and I think it'll look good. But for now, I think the dollar it's just going to be pausing here for a bit. I mean, that was a very quick, powerful rally that we came up through when we broke above that resistance at about 23.70. So dollar, I think, is I wouldn't be too worried right now. I think it actually, UUP is going to be a bit of an opportunity here if it pulls back a bit further, because I think the dollar is still going to be soaring.
Yeah, and I would just, I can go ahead and just show this one chart if you don't mind, while you're getting your sentiment stuff ready.
No problem.
Yeah, this is a chart that I've shown quite often. It's one of my favorites to follow, especially with what's going on with the dollar and all. But we're not really seeing any kind of deceleration in the U.S. Treasury yields versus Germany. We continue to make moves up. We broke out above the recent high and talked about this a lot, so I won't go into it a whole lot, except to say that the dollar does tend to play catch up, that these two do tend to move together. And with the yields in the U.S. moving up faster than Germany, continuing to move higher, I think it's just a matter of time before the dollar catches fire. We've made a couple of pretty big moves already to the upside, but you can see on a relative basis where the dollar was back at the end of 2016 and where the U.S. rates were versus Germany, and now where things are and where the dollar is. I believe that there's still a lot more room to the upside in the dollar, and I think that could impact trading strategies going forward. I'm going to continue to kind of look for those smaller cap stocks until something breaks down here and tells me otherwise.
Yeah, I still think that, the dollar looks pretty good. I love that relative chart you do, the correlation chart, I should say.
Yep, we're starting to see positive correlation again between the two. I mean, you can visualize that we're moving higher and the dollar's going higher too. But you can see what happens when we have this inverse or negative correlation for a period of time. and what's happened in the past. We've had these huge moves in the dollar. Saw both the last 2 times in 2010 and in 2014, and it looks like it's just starting now. So this could be a pretty important theme going forward.
Absolutely. All right, well, let's go ahead. I'm going to get into my sentiment update here. I'm actually going to start with, let me get over here. I'm going to actually start with that climactic indicators chart because I wanted to, I discussed it and I didn't show it. And it does have some sentimental value, some sentiment value. Oh, man. Okay, so what I was looking at and what I wrote about earlier on Wednesday was the fact that when you see climactic breadth readings and when you see an accompanying penetration of the upper or lower Bollinger Bands on the VIX, you tend to get these rally pops or these quick declines or pullbacks and then a resumption. So I know for intermediate term traders, maybe not as useful, but I think short-term and especially day traders, I think this chart's really important because it does show the way very short-term sentiment can be worked out with the VIX. And when you get those very low readings, yes, it means everybody's complacent, but it also means in a sentiment sense that everybody is very bullish. And whenever you have sentiment where it's really swinging to one side or the other, you should expect a reversal. When I'm using it with breadth and the Bollinger Bands like I do here, you're going to get a very short-term picture. So that's why I don't necessarily use this inverse scale for the VIX when I'm looking at a more longer-term picture for the VIX, but I think it's really right on in the shorter term. So what I'm seeing right now is the first thing I look for are climactic readings in breadth. And that tells you there's a swing. That means I want to spike to the downside or the upside. And you can see that yesterday we got a really large spike on the breadth readings to the positive side. And we saw the VIX penetrating its upper Bollinger Band, meaning it's getting very low. I inverse them because I look at things as oversold and overbought. And when the VIX gets very low, that means it's overbought and you should expect a downturn in the very short term. So here's what I have. I have very positive breadth readings and I have a very low VIX that is now penetrated the upper Bollinger Band. And so now I need to look at this as these climactic readings as either an exhaustion or an initiation. And I see very positive readings, that upper penetration of the Bollinger Band. And what are we getting these readings off of? A strong rally. So what this suggests to me is a buying exhaustion. So I would expect continuing in that we'll see consolidation more likely than anything. We're seeing some pretty strong moves right now to the upside. So I think, at a minimum, I would be looking for a bit of sideways action, maybe some consolidation into next week, which is why on our poll today, and go ahead and take it, we'll take a look at it at the end of this section, whether you think the market will close higher, lower, or mostly unchanged next week. I'm in the mostly unchanged category because of this chart. Too much complacency and these really powerful positive breadth readings read to me like a high bullishness in sentiment. And if you recall, sentiment is contrarian. So if everybody's bullish, that's bearish for the market. But this is a climactic chart. It's in the very short term. So in the very short term, meaning like next week, beginning of next week, I'd expect some consolidation or maybe even a downside move. So let's get back to more sentiment charts here. And as I said, I thought they were pretty interesting. I always find my charts interesting. Who am I kidding? But what I wanted to look at, hang on there. I'll just ignore that. What I want to look at first is the 10-day moving average of the put-call ratio. And what you look for here is if you get higher readings, that means investors are very bearish. And if you get low readings, that means investors are bullish. And remember, it's contrarian. So bearish is bullish for the market, bullish is bearish for the market. So what I'm noticing right now, what we look for, I think on this one in particular, when we're starting to get concerned, is these bottoms on these indicators, because you tend to see a downside move. I mean, it was pretty right on some of these. So that's what I'm looking for, are bottoms. We're not bottoming though right now. We're still continuing lower, and we have not hit that overbought territory, however you wish to look at it. We haven't reached that level yet. When we reach that level and then start to bottom, that's when I start really worrying about it for the market. So when I look at this chart, I am looking at it as mostly neutral, maybe somewhat bearish, because we are getting down to lows where we could see that bottom turn up, and bottoms are not good for the market. AAII, and I'll just go through these pretty quickly at this point. There's less certainty in terms of the neutral readings. Notice that we're getting a squeeze here on these results. And when we get squeezes, that's generally not good for the market. But as you can see, you know, consolidation, yeah, a little bit of a downturn. That turned out to not be too fun. But when people are getting uncertain, I find that to be somewhat bearish, because if they're uncertain, they tend to not be leaning toward the bullish side. So you can see these readings, we're still getting a more bulls than bears. So our ratio is slightly elevated here, but it's not in overbought territory. So I really look at this as AAII as mostly neutral. Name exposure, I don't want to look at that one. I want to look at that one, that one. All right, get my clicking back here. And very quickly, I know we're running a little low because I wanted to talk about those other things. I'm seeing this pretty neutral. Readings are right in the middle. They're not especially low. They're not especially high. So I see this as a neutral chart for sure. And the Wall Street Sentiment Survey, that's what we're going to be taking shortly here. And I want to look at Ridex, and then we'll conclude and look at that poll, see what you all are thinking. So right now I'm looking at increased exposure to the market, because we're seeing bear funds increasing their assets, and we're seeing bull funds increasing their assets, and we're seeing money come out of the out of cash. So we're seeing an increase in exposure, but it's completely mixed. So again, I would read this as neutral. So let's go ahead and look at the poll, and then let's do the summary chart, Gretchen, if you could. As I make you scramble in the background. All right. So I'm going to show you that summary chart. Basically, I'll put that in the Market Watchers Live recap, so you will see my conclusions. But basically, I think, last week we were really looking pretty bullish as far as the sentiment was concerned, because people were feeling bearish. This time we're starting to reverse, and we're starting to move into that neutral section. So at this point, let's see, what's the poll telling us right now? Okay, 46% of you are looking at it, at the market moving higher, and 30% lower, and 24% are in my category of mostly unchanged. So with that sentiment being neutral to somewhat bearish, there we go. Now you can all see. You can still keep voting, and we'll see what you think. But right now, that's what I'm going to turn into the Wall Street Sentiment Survey. Tom, what say you? Higher, lower, or mostly unchanged?
I don't mess with these uptrends. I'm going higher.
All right. You in the audience are bulls this week, and I am boring neutral.
Yeah, historically, this is the middle of May isn't a great time of the month, but technically, I'm seeing some pretty good stuff. And for me, the seasonality kind of takes a back seat to everything else. I like to have the seasonality lining up. I feel more confident about my trades when the seasonality lines up. But in this case, May's not a horrible month. Actually, May's a pretty good month, especially for small caps. But the tendency is that you get much of that strength at the beginning of the month, and then again at the end of the month. The middle of the month tends to struggle a little bit on a relative basis.
Yep. Oh, and here's my recap chart. So this is just a recap of what I saw on all of those indicators, but what I want to point out mostly is the conclusion. But you can see everything is mostly neutral to bearish or somewhat bearish for the market. And like I said, last week it was bullish for the market. And this week we're now moving toward that neutral to somewhat bearish for the market. So what that tells me is we could be looking at a reversal on tap, or at a minimum, I'd say some consolidation. But we'll have to see. Like I said, I'm going neutral into next week based on the sentiment and based on my climactic indicators for the short term. So I'm looking at a flat week by the end of next week.
Yeah, I think technically for me, just the S&P getting through that 2715 level kind of opens the door for some more buying.
Absolutely.
To the downside, I think 2700 to 2715 needs to hold on any pullback, but I think we're going to go higher. I think we're going to maybe go up and challenge those highs that we saw in late February, mid-March, maybe at around 2775 to 2800. I don't know if we'll do that next week, but I wouldn't be shocked if we did.
Okay. Yeah. I'm thinking we might have a little bit of consolidation, a little bit of pullback before we resume to the upside. I mean, my indicators are looking pretty good. I went over those on Friday and I wrote about them on Wednesday. I think they're turning around. The short and intermediate term indicators are definitely turning around and starting to look better, but they haven't quite gotten to where I'd be really comfortable. And like I said, after looking at these sentiment charts and that climactic indicator chart, that just gives me a little bit of pause for next week for a pause.
Yeah. Well, we did have, I'm watching the XLY in particular, which is the consumer discretionary ETF. And back in March, looks like maybe the third week of March, we did go above 105. And since then, we have gone back to 105 or just above 105 on 4 different occasions. Haven't been able to get a close above that level. So I think that could be the next big signal for the market, is if the XLY can clear 105 on a closing basis. I think that would add to some of the bullishness we're already seeing in technology and in many of the small cap stocks.
Yep, absolutely. We'll see how it rings itself out. And like I said, I think the dollar is going to pause here for a little bit, which suggests to me that gold will probably pause as well along that support. We'll have to see how it all rings itself out, but we will be back here on Monday, and our weekly schedule is looking pretty good for next week. Monday, Tom, you're not going to be here, so have a great 3-day weekend.
Thank you. Certainly appreciate that. Yeah, I'll be back on Tuesday, and I think the following week, I think you had mentioned you'll be out a couple of days, and I think Julius will be joining me. So,
indeed, you guys are going to get a little bit of a mix up on the commentary. I think it'll be great. Bruce Fraser, of course, Mr. Wyckoff will join me Monday. I'm going to do my workshop on Tuesday, probably on how I trade or my trading plan, or something to that degree. I don't have a snappy title just yet. Dan Russo from Chicken Analytics, he's doing that new morning show pre-bell, and he's going to join us for a full segment on Wednesday. And then, of course, Thursday, we'll have Julius here, and he will join you as well on Monday and Tuesday of the next week. And with that, I'm going to say goodbye and TGIF.
Yes, I want to thank everybody for joining us and being with us today. Please remember to complete that survey as you exit. We love to get your feedback, to hear what you think of Market Watchers Live. As a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe. And we'll see you back here on Monday. I'll see you back here on Tuesday. Happy trading.